Warren Buffett, the Oracle of Omaha, one of the greatest investors of all time, has reached a net worth of $100 billion as his company Berkshire Hathaway continues to climb to record highs. And in this video, we're going to take a look at Buffett's portfolio, analyze the company's performance, discuss his recent stock purchases, and determine if Berkshire Hathaway is a buy right now. And before we do that, if you're new to the channel, please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And now we're going to take a look at Warren Buffett's company, Berkshire Hathaway. So Buffett owns 249,000 shares of Berkshire Class A stock. And right now, those Class A shares are trading for over $394,000 each. And these are by far the highest priced shares on the market, and Berkshire Class A stock has never undergone a stock split, and Buffett has no intention of doing one anytime soon. But Berkshire also understands that most retail investors cannot afford a $400,000 stock. So he also has Class B shares that come with different rights, but currently trade for a much more reasonable $260 and gives you the same access to Buffett's Berkshire portfolio. And right now, Berkshire Hathaway has a market cap of over $600 billion, making them one of the largest companies in the world. And they're trading with a forward PE just around 24. And something important to note is that Berkshire Hathaway does not pay out a dividend. Although Warren Buffett is one of the greatest value investors of all time and collects billions of dollars in dividend income every single year, he has chosen not to dish out that capital to his investors in the form of a cash payment. Rather, he believes and has always believed that the cash collected by Berkshire is better used by their management, Buffett, Munger, and his team to reinvest, make acquisitions, and they believe they can provide a greater return than dishing out that capital to their investors in a cash payment. And if we take a look at Berkshire's long-term performance, we can clearly see why Buffett is considered one of the greatest investors of all time and why he chooses to spend Berkshire capital in the manner that he thinks is best for the company. So this chart is one of the first pages in Berkshire's annual report, and it lists out the calendar year and Berkshire's performance versus the S&P 500 with dividends reinvested. And we can see from 1965, Buffett continuously outperformed the market each and every year for decades on end. And not only did he beat the market, he absolutely crushed it. 80% in 1971 versus the S&P 500's only 14% gain. He then returned 129% in one single year, beating the overall market 23%. And we can see for decades on end, he continuously crushed the overall S&P by massive amounts. But as of late, people are doubting his performance and his ability to continue to outperform because over the past decade, we're getting mixed results, some years of outperformance and some years of laggard returns. But overall, the total compounded annual gain from 1965 to 2020 is 20% per year for Berkshire Hathaway and 10.2% for the S&P 500 with dividend reinvestment. So Buffett has almost doubled the average annual return of the S&P 500 over a 55-year timeline. And the total return of Berkshire stock over that same period was 2,810,000%, which is absolutely insane, versus the S&P 500's 23,454%. So we can see over the past 55 years how well Buffett has absolutely crushed the overall market performance and why he is considered the greatest investor of all time. And Buffett believes that over the long term, Berkshire Hathaway will provide their investors with returns similar to the overall market. And right now, the current share price for the Class B stock of $260 is trading very close to the estimated fair value per share, according to Morningstar, of $262. And I'm sure we've all heard Warren Buffett's famous saying that it's best to buy an excellent company for a fair price rather than a fair company at an excellent price. And right now, Berkshire Hathaway, which is absolutely an excellent company, trading very close to their estimated fair value, may be a very attractive level to start or add to position in Buffett's company. And although Berkshire Hathaway does not pay out a dividend, Buffett returns capital to his investors in the form of massive share buybacks. And in 2020, Berkshire purchased $25 billion of their own stock, setting a record high for the company. And although they didn't make any major acquisitions in other companies, they did buy back close to 5% of the company's outstanding shares. And in his annual letter to shareholders, Buffett stated that it's very likely that he will continue to buy back Berkshire stock throughout 2021. And now we're going to take a look at the companies that Buffett has been buying other than Berkshire. He didn't make any major acquisitions with the huge cash pile they have on the balance sheet, but he did make some minor buys over the past few months. And the latest ones from their past quarter were Buffett unveiled two big investments into Verizon and Chevron. These two high dividend companies operating in very different sectors of the market each received massive investment from Berkshire Hathaway. The company purchased $4.1 billion of the leading energy company in Chevron and $8.6 billion of Verizon, which makes it the sixth largest holding in Buffett's public equity portfolio. And if we take a look at each company, Verizon currently trades for $55 per share, a leader in the telecommunications space that has a ton of future growth coming due to the expansion of 5G, and they currently trade with a very low forward PE of only 11. So Buffett, being one of the greatest value investors of all time, must believe that Verizon was undervalued when he made his $8.6 billion investment. And the company also has a massive dividend yield at 4.5%. And Buffett purchased 147 million shares of this company. So with an annual dividend payment of $2.50, that means Buffett's going to collect over $360 million in dividend income every single year from Verizon. And the other major investment that Berkshire made was into one of the top energy companies in Chevron. Ticker CVX currently trades for $111, and they have a market cap at just under $215 billion. And this is another high dividend company with a current yield of 4.6% and an annual dividend payment of $5.16 per share. So if we take a look, Buffett purchased 48.5 million shares of Chevron, and with that annual dividend of over $5, that's another 240 plus million of annual income coming in to Berkshire's portfolio. So combine those two purchases, the 360 million and the 240 from Chevron, Buffett is now collecting in excess of $600 million in dividend income from these two most recent purchases. So going forward, that's a ton of capital flowing into the company every single quarter that Buffett can use to reinvest, buy back more shares, or make a major acquisition over the next few years. And although Verizon and Chevron were by far Buffett's biggest buys over the past few months, he did make some minor purchases into the pharma space. And in total, he invested $5 billion across four big pharma names. And the top three include AbbVie, which has a current yield of 4.8%, Merck, which has a yield of 3.5%, and Bristol Myers Squibb, ticker BMY, which has a current yield of 3.23%. So we can see Buffett also made a couple $1 billion of purchases in the big pharma space to more high-yielding companies. And all of these buys has added over $700 million of annual dividend income flowing into Berkshire's already massive portfolio. And if we take a look of all the public equities that they own, Berkshire's current portfolio has a market value of $286 billion, which is absolutely incredible. And their largest holdings include Apple, Bank of America, American Express, Coca-Cola, and Kraft Heinz. And we can see that new purchase in Verizon is their sixth largest holding in the entire company. And Apple is by far their largest with a market value of close to $110 billion, and Berkshire owns 5.4% of the largest company in the world. They also own around 12% of Bank of America, 19% of American Express, and 9.3% of Coca-Cola. And some other smaller positions in Berkshire's public equity portfolio include some holdings of General Motors, AbbVie, Visa, Wells Fargo, we talked about Bristol Myers Squibb, MasterCard, Amazon, Snowflake, Kroger, and many more. And in total, they own around 40 different public equities within their portfolio that has a market value of over $286 billion. And Berkshire Hathaway also wholly owns dozens of companies that are not publicly traded. And some of the big names include Geico, BNSF Railway, Dairy Queen, See's Candy, and many more. And some of the key sectors of its wholly owned subsidiaries include insurance, and this sector generated 24% of Berkshire's total revenue. And some of the big insurance companies are Geico, of course, Berkshire Hathaway Primary Group, and Berkshire Hathaway Reinsurance Group. So 3 main players representing 24% of the company's total revenue. He also owns BNSF Railway, which he purchased about a decade ago for $34 billion. And in 2020, that company had over 40,000 employees and generated $5.4 billion in net earnings. So a very nice purchase and a strong addition to Berkshire's overall portfolio. And the railway sector was hit hard by the pandemic, and that was one of the factors that led to a slight decline in the company's overall revenue. But Berkshire also has some consumer companies as well, including Dairy Queen, Fruit of the Loom, and BH Shoe Holdings. So overall, Berkshire's portfolio is extremely diversified. They own some major insurance and railroad companies, as well as dozens other smaller, fully owned brands. They have over $100 billion stake in Apple, $40 billion of Bank of America stock, and overall, their equity portfolio is diversified as well. So when you buy into Berkshire Hathaway, you're essentially buying into an ETF that is more concentrated in a couple different companies, but overall does have broad exposure to many different sectors of the market. And now if we take a look at Berkshire's financials, we'll start off with the income statement. And in the trailing 12 months, the company generated $245 billion of total revenue, which is absolutely insane. And over the past few years, they have been somewhat consistent, averaging around that $250 billion mark. But with Berkshire, what's extremely impressive is the company's balance sheet, which has an insane $138 billion of cash on hand. This is one of the strongest cash cow companies in the world, and we can see that over the past 5 years, they were able to grow this position from $74 billion to close to double at that level of 138, and that just means Buffett has unlimited cash at his disposal to make acquisitions, to reinvest, to buy back his own shares, or to really do anything he wants. And what's impressive is that there's only a handful of companies on the entire market that are worth $138 billion in the terms of the company's full market cap. And Buffett has that same amount sitting in cash at his disposal whenever he wants. And if we take a look, the company has close to $200 billion of total current assets. And if we compare that to their short-term debt of only $55 billion, their current ratio sits well above 3 and is extremely sustainable. And right now, they have over $873 billion of total assets, and compare that to their total liabilities of only $422 billion, they're in a very strong financial position. And another thing that's extremely impressive is that total equity continues to grow year over year, and that balance sits at $451 billion, which is absolutely incredible to even say out loud. So overall, Berkshire is in a very strong financial position, and if we take a look, analysts are predicting some high growth from this company over the next 5 years. They're projecting 23% per year growth over the next 5 years in the future, and the current share price of $260 sits below the 12-month expectation of $275, and the company is currently rated as a buy. So overall, I think Berkshire Hathaway is a buy at this current level, in my personal opinion. Of course, I'm not a financial advisor, so you have to do your own research, but from my understanding of the company, the underlying holdings, I really do believe that at this current level, even after the massive run-up, that Berkshire is fairly traded with a $600 billion market cap. And if we just quickly go over everything we discussed today, it's very easy to get to this $600 billion level. The company has a public equity portfolio that is valued at $286 billion. Add the $138 billion of cash on hand, that already gives you a total value of $424 billion. Plus the dozens of wholly owned subsidiaries, including Geico, BNF Railway, and many others, that easily adds up to over 100 to 200 billion of equity that is not publicly traded. So that combined will give you that $600 billion market cap for this massive conglomerate. And with the billions of dollars of passive dividend income they collect every year, I think Berkshire Hathaway is a holding that's going to be around for decades in the future. And sadly, Warren Buffett is 90 years old, and eventually he will have to pass away, but his company that he has built over the past 6 to 7 decades is going to be well established for many years after he has left the earth. And I think no matter what, Berkshire is going to be one of the largest players in one of the leading companies in the world for decades to come. And I wouldn't be surprised if we see this company hit a $1 trillion market cap over the next few years. So those are my thoughts on Warren Buffett's company, Berkshire Hathaway. We're going to wrap up the video. Thank you for watching to the end. I am the Gen Z Investor. Every single day we talk about the stock market, discussing different companies you can buy or sell in any major market news. And of course, the headline that Buffett has surpassed a $100 billion net worth means we had to discuss it on the channel and take a look at his company that is one of the largest in the world and have absolutely crushed the S&P 500 over the past 55 years. So thank you for watching, and I will see you in tomorrow's video.